Evening to all of you. Welcome you to today's webinar. We are continuing the discussion which we had 2 days back, that is the Fibonacci trading. We are going to show illustrations. That day we explained the concept of Fibonacci trading. In previous webinars also we have highlighted what is a Fibonacci number, what are Fibonacci ratios and all. So quickly we will recap that. Then we will look at the Nifty Bank Nifty views, and then we will also look at the illustration of Fibonacci concept in equity trading in stocks, as well as probably we'll also look at commodities. Now we have already highlighted that earlier we have said that the Fibonacci ratios, that is 23.5% retracement, 38.2% retracement, 23.5, 38.6, 50 is not Fibonacci but it is used, then 61.8, then 76.5. So these are ratios which are used by traders. So either you can use the ratio or you can use numbers. Numbers we have already highlighted, that it is from 1, 2, 3, 5, 8, 13. So you add two consecutive numbers, you go on endlessly. So at some stage you'll have 144, 233, okay, and then add this 377, then 610, then 987, then 1597, right? So you get to these all these numbers by adding two consecutive numbers. Now, how do you use these numbers or the ratios? That is what we saw with some illustration on Tuesday. Now we will expand that. So before we go to that, its applications in stocks as well as in commodities, which will show both for position trading as well as for intraday today. Okay. Before we go to that, let us look at the view. Nifty, the present development, and what is likely to happen. Now this is the Nifty chart. This is the daily chart. And our judgment is it is bottoming out, because you see the last 3 weeks it has not been able to break this low. Look at this this particular low. So for 2-3 times it has bounced, 3 times it is now bouncing from this level. So the easiest and the bottoming out strategy is that you buy above today's high, which is 17,945, and keep 17,858 as a stop loss. So approximately just 100 points or even 90 points, for which the gains can be quite substantial. Now first it may go and meet some resistance around this level of 18,140, 150 levels. So a decisive break above 18,150, 160 is going to turn the Nifty bullish for a test of the previous highs. Now this is also because this particular this one, that is the Fibonacci ratio, is also look at the Fibonacci retracement from this important low to this important high. So it is coming closer to the 50% retracement, right? So it's a 50% retracement. 17,810, it's approximately the same. So a 50% retracement has also come. So the market looks quite ripe for an upward move, because it has already retraced 50% of this move. We could have expected, because if this breaks, we could have expected 17,556. But nevertheless, this is an 100-day moving average support. We have already shown the 100-day moving average. We'll remove this. We'll look at the indicators. We'll put the moving average. Now we'll change it to 100 days. We will look at the So just see this, it is coming this 100-day moving average. No, this 100-day moving average has given many places. The last important support came at 100-day moving average when there was a fall. So this time the 100-day moving average is now giving support. So we should look towards buying above this particular level, which is 17,945. And if it breaks below 17,760, I think today's low is 17,760. So approximately we get 190 points as a stop loss. And if it moves up, then said 18,140 is a resistance. A very significant close above 18,140 is going to get Nifty back probably above the 18,800 at some stage or other. So this is a good place for investment. And if it falls also, we can, for investors, they can continue to invest at 17,555, 17,230, 250 levels, which are where the 200-day moving averages are coming. Now this is, we will look at the 50-day moving average and 20-day moving average to know the levels of resistances based on moving average before we go to the Fibonacci. Now 50-day moving average. Now if you see last time, the resistance is coming closer to the 18,295 levels. But we don't need to wait for that. It will break 18,000. That's the judgment that we need to take, considering that we are going to buy closer to the 100-day moving average, which is of course a counter trend buying, because the trend is still down on that basis because it is below the 50-day moving average. But expecting that the 100-day moving average is going to give support, we are going to put that probably with a stop loss at 17,795 for traders. But if you are an investor, I think having bought at this level, you can average it out at lower levels, 17,550, 17,200, 300. You can keep averaging your quantity there. Now let's look at the 20-day moving average, where it comes. See, look at the 20-day moving average. That is coming closer to the 18,090, 18,100 levels. So that's why I said that a break above 18,140 itself can be significant, because it can show that we may cross the 50-day moving average also. So instead of waiting for bigger up move, I think we can start buying here itself. So that is the call as far as the Nifty is concerned, that probably we are looking at some sort of a bottom. Now that also comes from the fact that we are getting some good data. Today's inflation data, we got below the 2 to 6% is RBI comfort level. We have got CPI data coming at 5.7%. The IIP industrial production data is 7.1%. In an hour's time from now, we will have the US CPI data, and if US CPI also softens, then we can see a rally coming in US equities also. So if things work out well, then US equity markets are also poised for an up move, which will be sentimentally supportive, because last 1 year we are disconnected with US S&P. In the sense that last year, as our Nifty index on a year-to-year basis was up 4.4%. But S&P was down, US S&P was down 19% year on year. So that way, Indian index outperformed, okay, by almost 23%. Now S&P looks as if it is bottomed out, because based on the oscillator divergence as well as what we could look at it, is that US S&P also looks to be bottoming out, and the significant move above 4,000. That is probably it is I would say it is only 70 to 100 basis points away from turning bullish for a big up move. We look at the S&P index. Okay, so this is S&P, and we see now the this is the we'll put a, so this is the trend line. This is the trend line resistance which is coming. So all the major tops have been have only touched this trend line and fallen. You see the top, the next important top, then this top, then this top. So 4 times it has failed around this line. And right now that particular line is now emerging closer to the 40, 50, 40, 60 levels. And right now we are at 39.70. So we are 70 to 80 points away from a big up move in global markets. Now This can come mainly because of the despite Fed moving the rates up, the U.S. Treasury yields 10-year yield is down to around 3.55%. It was at one time 4.25%. It has now dropped down to 3.55%. So a softening of the US CPI data probably can force Fed to consider about the aggressive rate rise which they are pursuing. Now they last time they did 50. In February maybe they will still do 50, but there will be pressure for them to slow down from 50 to 25. So gradually in the next 1-2 meetings it will come down from, it has already come down from 75 to 50, it will come down further to 25, and then probably in 3 months time or by mid this year they may look for a pause and then wait for another 6 months to gauge the impact of the steep increase in interest rates which they have done for the last 1 year. So market is guessing that right now, and that is the reason why we are now looking at a significant upturn in S&P index, and whatever that is applicable as far as S&P is concerned also applies to Nasdaq. Now there is a big correlation between Nasdaq and Indian IT sector. So if you look at the Indian IT sector, the CNX IT index, now that also this performance is comparatively better when compared to Nasdaq, and today Infosys has announced good results. So chances that probably we might have bottomed out as far as the CNX IT is also concerned, and it may start moving up because this is one index which has not performed well when compared to the broad index. So there's a chance that this could catch up. So because the last 1 year whatever performance that we got in Nifty was mainly due to banking index. Now that has already had a substantial run, and probably yes, there is still steam left because most of the PSU banks are still not valued to its potential. So there can be a dip and there can be a rise. So probably this time the bull market can be supported by both the bank as well as by IT sector. Okay, the IT sector, of course, the problem is that the valuation is still rich, despite the EBITDA growing at an expected pace of 8 to 12%. And some stocks are going at 8%. Some stocks today, Infosys announced a 13% growth. So the profit growth is there with a high return on equity, and its strong correlation with what happens in US tech stocks. So there is a chance that probably if we call for a bottoming out of Nasdaq and S&P, then we can also call out for a bottom of CNX IT. So this is another sector. Probably you can look at the as a strategy, you can look at tech mutual funds from now onwards, and then look towards riding because there you have got a much greater potential because of its fall. So tech sector, you can look at it considering that it is now ripe for a turnaround. Now we will go from our views to the system, which is the theme for the day. Now Fibonacci trading, we have already explained, is the is a very simple concept. It's a very simple concept, and what you need probably is that you can do it with the help of charts, or you can do without the help of charts also. Okay, you can also do an algorithmic programming and use that. But only thing is there could be some minor adaptations which may be required, and those things to put everything in the system it's a task by itself. Okay, so if you want to perfect the system, then you definitely need to spend more time on developing that particular software. But let us first understand how we can develop even what is the route forward there. Now let us say the Fibonacci system, whether you use it for position trading, you're using it for investment purposes, or you're going to use it for day trading. Okay, so it can be used either for investment. Now investment we have just seen. Now we will give illustrations for each of this. Now investment, just now we looked at Nifty where it has stopped at 50% Fibonacci ratio, right? So this is what we saw is a 50% Fibonacci for this move. So for this move, it is exactly a 50% move. Now let us look at, we can draw Fibonacci from various points. Now from this point, let us say, from the most important low of this particular year, where it bottomed out, we are in between at 23.5 and 38.2% retracement, and by the time factor probably we could have been exactly at 38.2%. Let's look at the Fibonacci resist fans. See, exactly at the 38.2%. We are converged exactly at 38.2%. So this makes a good sense that probably we are bottom, because today of course we are not talking about Fibonacci fans, which we have already had one webinar before, but we will have it again at some stage. Now that is, it also combines the concept of time along with price. That is the Fibonacci fan. Now the Fibonacci fan of 38.2% gives a great support at this level. You can see that happening, right? When I draw this Fibonacci fan from the bottommost of this month of this year to what has happened. No, this year means last year, I'm saying, to what happened to the important high. So what we can say is the most important highs and lows. You see the 38.2% retracement holding there from a Fibonacci fan point of view, and it is now above the 38.2% in both these. So it's very clear the support has come. It looks as if the support has come, and any downside break probably we may we could probably see the market heading towards the 50% side, which could be 17,570, 580 levels. That is where it is coming right now. So we will not look at this for the time being. We will more look at what has happened till now, and probably whether we are making guess as far as the correction point is concerned. So this is one place where probably we feel market has already stopped. So now let us look at, this is the investment call, right, from the Nifty point of view, based on the Fibonacci both fan and Fibonacci supports. Now before we go for any intraday or position trading concept, let us look at stocks also, where we can make big calls. Now we have already highlighted the ratios point of view, right? We have already said that 23.5, 38.6 are very important places. Then of course the 61.8% comes. So if you are looking at investment in big stocks, let us say you are looking at investment in companies which have been giving profits consistently, and where the earning cycles is likely to show a steady growth without any big dip. Now for example, let us say TCS, most of the IT stocks, Infosys, they don't give much of a negative surprises. Okay, that means they are not that cyclical stocks, unlike companies like Tata Steel, okay, where you have to predict the cycle and play the cycles. Okay, that is, if it looks like going up because of the present cyclical reasons, for the fundamental reasons, you should be into the metal complex. Now let us say in this IT complex, TCS and Infosys here, normally these have, for example, in US markets also, let us say Microsoft, they have a very steady growth. What I'm saying is they've got quite a steady growth. Okay, so year on year there is some definite profit growth is there. So we are talking about those stocks, not about stocks where the profit element is volatile or very high, because very high profits can also lead to downward shift. So steady companies. Now TCS, Infosys, then some of the FMCG companies like Hindustan Unilever, then Reliance is also one. Okay, these are all generally they come out with HDFC Bank here. Okay, HDFC Bank, ICICI Bank. So these are all stocks where the profit growth is a little more predictable and well analyzed. So except during certain times, normally we'll have a good. So these companies, what happens is, whenever a bigger correction comes, normally these stocks generally halt at around 23.5 and upward. It could be approximately 25%. It could be approximately 25%. So those investors who are thinking of investing should look at stocks of these particular nature, and if you get something closer to the 25% or from the peak 23 and after 25%, around that level, you should go directly for investment. Okay, I will show you the illustration first. Even if it takes time today, I think we'll continue the same discussion for illustrations next week also. So request you to be patient as far as even the intraday thing is concerned. I'm also equally enthused to give you important information on the points where you can enter and exit as far as intraday is concerned with very less stop losses. But before that, it is better to take a bigger picture and then come down to the smaller ones. So now let us say I told you this 23.5 to 25% from the peak. Let us look it through illustrations now. Now I will first go to TCS. Some of the stocks which I mentioned, I will highlight that. Okay, Tata. Now I'll put a bigger chart. That is a monthly chart. Okay, so now let's look at this stock. Approximately 4,000, right? So approximately 4,000, and approximately you got around 3,000, right? So the close is around 3,000 also. So 1,000 points, okay, approximately 1,000 points fall. How much it reflects? 25% from the peak. That is what I said. The investment comes there. First investment comes here at around 25%. Okay. The second investment goes very closer to this. It could be 38. Some cases it could be 35 to 40. So around I put in a median level, but this is a Fibonacci number. Plus or minus something can always vary, and this is applicable for very good stocks. Okay, very good stocks, whether it's top stocks, whether you are an investor in India or whether you are an investor abroad, because we are talking about principles, only to highlight the give for illustrations, right? So we are also talking about using this in steady companies. Now, if you're talking about international companies, probably the same thing can be applicable to Microsoft or Apple or Google. Okay, maybe less applicable to other volatile tech stocks. Okay, so now let's say this 35% and this 38.6%. You can continue to do investment at various ratios which we said 61.8, 73. So 4 places you keep on investing, even for stocks which are high profile stocks, but due to certain reasons it has gone down right now. So now let us look at, I've shown you this chart which is the for TCS. Now we look at HDFC Bank. Okay. HDFC Bank. Now, in this particular fall, see this is a pandemic. We will go for pandemic type of correction, which is one of the worst correction for a shorter duration period of time. Now we will look at this correction which happened in the recent last year, ever since it made a top. So 1725 and approximately 1300. So 425 points. So 425 divided by 1725. So divided by 25%, approximately 24.5%. This is what I've been saying, 23.5 to 25%. So that is the band where you see this particular correction, right? So HDFC Bank also became a great investment at 1278. 1278. No. So ever since the last few months, I think the last 5-6 months, it has gone back almost to the same level, giving a return of 20-25% return, right? So this is the place where the investment potential comes. Now, if you look at the HDFC Bank stock, when it fell from 1300 levels, it fell closer to the 800 levels, right? Approximately 750. So 1300, 750. If you look at it, 750 divided by 1300, the fall is 42, 43%, right? So the fall is, so in the biggest correction that we saw, HDFC Bank fell 42, 43%, but immediately it bounced back. When I told you that when you invest anything around the 38, next correction comes 38.6%. So let us say you didn't know about anything, so you invested somewhere here, you invested somewhere here. So the average, from the average peak, you would have invested at something like 30%, or something like 7 to 8% only from the bottom, right? So now after that you have seen where it is right now. So good stocks, because of any panic, if it gets pushed, or even if it due to earnings problem, if it gets pushed lower, then these are the important places where you can invest, because these stocks, as I told you, they are not going into any loss. There are some issues in that particular year. It could be macro issues or it could be micro issues. If it is related to macro issues, then definitely those points which I highlighted to you, definitely they become buy points. If it is related to a stock, this one, that is either the company suddenly has turned out to be wrong investment decisions they have made, or the profitability is not growing for competitive reasons, or something like that. If it comes through, then in that case we need to be very careful about that particular stock, which has happened in many cases. So we need to be very careful. So we should not blindly apply this to all the stocks. Most important is whatever that we have seen, stocks which having a good, because companies may be great. For example, we have seen in a lot of time in stocks like even Tata Steel or Tata Motors, they are all great companies only, but then there was a great underperformance and the decline has been quite steep at some stage. Tata Motors at one point of time lost 90% of its value from the peak a couple of years back, and then it revived and maybe it has come down, come back, roaring back to those levels. So if you had bought on dips and various declines, you would have still made money, but it would have tested your patience. So we need to be careful about certain companies where the earnings growth is not consistent, So we are only picking those stocks where earnings growth is consistent till now, and also those points which, when the correction happens because of the valuation correction, not because of the EBITDA issues, it is happening only because of the high extreme valuation which was given during a bullish period. So those stocks which you are identifying all becomes a buy place at this. And other stocks, let us say you cannot apply your mind on all those other factors, then all those places of the Fibonacci, there's 25, 38.6, then 50, 61.8, so all those becomes buy point. So you keep averaging it on all those places, you will still end up making money, but with a caveat that if you have done this in a stock like S Bank, you would have been nowhere now. So picking that particular stock where you have to do that is also extremely helpful. Now let us look at stocks. The same thing will apply to Reliance. We'll look at illustration, Reliance Industries. See, this place, it was it went up closer to the 2850 and 2300. Okay, so 550 divided by 2850. It is 20%. So it didn't even come to 23-25% correction. It just stopped closer to the 20% correction. So again, a stock which could have been bought on this particular dip. So these are examples where the first type of investment that can be made. Now, if you look at international companies also, let us say, just for illustration purpose I am saying, now let us say Microsoft. Now, let's say where we should probably look at, at one time the stock was 350 levels, right? So 350, the first point into, let me say 0.75, that is 25% correction, around 262. So the first place became 262. The second place at around 38%, let us say 61.8, 350 into 0.618, it became 216. So the places where I would have invested are 262 and 216, because 262 and 260. Now if you look at Microsoft, from 350 it came down to 213. This is the lowest, and this is the 61.8%, or the fall is around 38.6% from the peak. This is the Fibonacci ratio, right? So assuming I done at 216 and 262, so 40, it's approximately 46 divided by 2 is 23. So my investment is around 239 average, and the stock is just around that. Stock is around that. So we will see the return, how it comes after some time. So an investment closer to this level, okay, is a good investment. So it is slightly below that only. So on an average, if you're not somebody looking from overseas, if they want to invest, they can do that. So similar thing applies to any other stock, whether it is Apple or whether it is Google. So we can apply the same thing. Similarly, same Indian stocks which I showed to you. So investment decisions on good companies, or where the earnings growth has been consistent, but there has been some issues due to macro related issues. Now the macro related issues could be a supply side problem that will get sorted out, right? Then probably it could be an interest rate cycle that will get sorted out. What happens is that only in the case of now, let us say the company's future is bleak because of the changing landscape of the product, or changing landscape of the technology which is there, or some issues which are there. In that particular case, no, will find it very difficult to know whether whether there's a future itself for the company. So we have to be careful on that particular front. Now going back to the same Indian stock for Tata Steel. Why I want to show is this. Now let me say Tata Steel. Now let's say Tata Steel fell from 153, right? From 153, it fell down to 82. So this is 71 by 153. Approximately, it's almost a 50%. Approximately 50%, right? 153 became 82. 153, 82. So 71 divided by 153. The fall is around 46%. So approximately 50%, we can say. If it has been 76, 77, it would have been exactly 50%. So the fall has been 46%. Now, the first place probably, let me say, if you have gone by the same principle, 153 into 0.75. The first thing is the place where you would have invested is approximately 25% fall. Then 153 into 0.618. And then the 50% which we did not get at all. So let me say where it is now. For those people who have invested at these ratios, you would have invested at 115 here. This one is 153 into 0.618. This would have been at 95. So your investment would have started 105. Now it's around 120 or so. So you still got a 15% gain right now. This is for investors. Blindly you invested. If it had gone a little lower, you would have got at 50% also. Now, okay, let us say you have not invested at this level. You saw you are smart enough, and you are looking at the market falling, so you kept on hold. So let us say you want to ensure that the market it stabilizes, and then only on up move you would like to buy. So there could be different type of strategies and different personalities in any trading system. So let us say you want you are looking at some sort of a fall, then you want stability, a revival, and a confirmed revival before you want to get into the market. So how do you look at the confirmed revival? Now let us say this 153 by 115. What is the difference? Around this 25 points is approximately 38 rupees, right? So 38 rupees. Okay. Or it could be 35, because if we put 0.235, which is the exact Fibonacci thing, it will be something like 35 rupees or so. So assuming it is 35 rupees, then the low was 82. So what happens is the revival can be first known once at 25% of this, or 23.5% of the retracement is known. The stock, if you look at it, 153, if it falls by more than 23.5%, that means it has fallen from 0 to 153, whatever retracement. In that 23.5% has fallen, right? That is 35 rupees. So from the bottom, the market has to get itself above 35 rupees from the bottom for it to confirm that the downtrend is over. Now, let us say 153 minus 35, 118, right? So when it fell below 118, okay, you said that no, you don't want to invest till such time you want a confirmed revival. So it fell back to 82. So you are applauding your decision at that point of time. So now you are looking at an investment once you are confirmed that it can, now it's going to revive it. So now what is that revival number which you want? That number is the same, this 35 rupees. Since it fell down by, since it got confirmed, the first Fibonacci number for Fibonacci ratio for the highest point of 153 came at 35 rupees. So the same 35 rupees you should add to any bottom to know whether whether it has completely bottomed out and whether you can look towards an up move. So here it is 82 plus 35. So you need something like 117, 115, 117 approximately to know that the market, you are now with a confirmed revival and you would like to invest now instead of investing at this point doing a fall. Let's look at whether this happened. Now let us say it fell to this is a monthly chart. You can see it fell down to 82 here, then it went up. It is 114. Okay, we were looking at something 116, 117, 114, and then there's of course the 20-day moving average is also there, so it is broken there. So this is an confirmed up move right now, right? So this 113 has been broken. This 113 has been broken and it has started to move up, right? So now if you look at it, that is the commodities sector looks, particularly the industrial raw materials, seems to be turning on the upside. So that means steel is one item that is, so we have to read it along with the fundamental factors that are developing. China has lifted its restrictions on COVID, and because of that there could be a surge in for metals, because China was closed for nearly 2 to 3 years, and now the demand again in China will revive, and because of that the commodity prices will start edging higher, particularly the industrial raw materials, whether it's copper or steel. Based on that fundamental reason, and also having fallen from this with a very good valuation thing, Tata Steel has started to revive, because we were saying even before, if you remember, when we are looking at the fundamental factors, okay, of PE, EPS, PEG growth and EBITDA growth and where it should be, and based on valuation, most of the valuation models were suggesting that Tisco should be much higher if the profit, if there is no profit negative surprise. So it is a potential to climb even to 180, 190 levels. That's what the valuation models show. So you get a very deep profit potential with a very less chance of a downside. So that is where the investment looks to be very attractive, and Tata Steel fitted in that particular category as a value stock also. Okay, as a value stock also. So Tata Steel looks to be now technically from the Fibonacci side, as I told you, for the reasons which I said, that any break above this 114, 115 is now going to take it on the upside. Now let us say we have talked about this investment. Probably we have shown all these things. So from the investment point of view itself, we will probably look at gold. Okay, let's look at gold, okay, as a commodity, because we are now going to see investment Fibonacci trading based on, for investment we are going to look at the position trading and intraday. Suppose if you are not able to cover in the next 10-15 minutes, we will have it in the next session. See, this is gold. Okay, so now let's look at the big picture. This went closer to the around, we can say the high was 2075, 1967. So we can say okay, 2075, it says what, 2050. Okay, it's approximately the top. Then 2050 into 0.765, 23.5%, makes it 1568, 1570. If you take exactly the 2075 into 0.765, 1587. So the gold, if you look at it, 1614. So the first indication that we got, normally I am putting it 23.5%, but if you look at classical thing, it will say 20%. Normally it will say as 20% is the defining line between bull and bear. So if you take a 20%, then it is around 400 to we can say 400 points, slightly 2075 into 0.8, 1650, 1660 levels. So gold 2075 into 0.23, 0.765, because 23.5% should be there. It comes closer to the 1587 to 1600, and the bottom is 1616. So the gold became a good investment when it came down at the lower level. Gold, I'm talking about in international terms. So when this, from this place it is going up, then probably the upside in gold as a commodity can be in gold price in dollar terms can be more than probably what we can see in the reversal in dollar rupee. So net and net we will still get a good return. So once it came down to this level, it became a good investment. So now looking back, it is now at 1850, 1860. For some reason it drops down. For some reason it drops down. May not be to this level. Let us say it comes to 1720, 1730 levels. It becomes a very good point for investment. It becomes a very good point for investment because you can at least see another 10-12% in gold itself coming very shortly. Okay, so a gold on any dip towards the 1720, 1700 levels, okay, they become a good place again to look at some sort of an investment through gold Bs, gold ETFs, or no gold bond schemes. But you should have the flexibility to get in and get out, because the gold bonds and all, it's locked for us sometimes. So please think about the strategy of investment later on. I'm only saying that these places can become good places for again investment, considering that this may not be revisited. Why? Because the US yields are already started to come down. Gold is a factor of what happens as far as the interest cycle is concerned in US. So at some stage Fed will be looking towards ending the interest rate cycle up. US yields have already started to come down, and that is the reason why we have seen the gold pushing higher. And that is why we have seen issue as far as the dollar index also is concerned. So based on all these factors, we should see the gold, any corrections is a place where you can go for investment again. So from investment Fibonacci we have explained with the help of ratios, okay, and also what is the confirmation that you will get as far as the upside confirmation, that if you want, what is the confirmation that you get. We have explained that it should again start going back above the first retracement of 23.5% from the peak, right? So based on this, let's look at the thing which is now we are getting closer to this. So, but I will just leave you with some thought process. We are going to look at position trading. We are going to look at the intraday trading. Okay. Now, like a trailer, first, no, you may be interested more in this and less in this, right? But I will just give you a preview of intraday and then explain both the intraday and position trading later on. Now, intraday, those who are doing normal intradays will be looking towards very small stop losses, right? So you will not be looking at big stop losses. So what is a stop loss? Probably you will be looking in Nifty. Probably you will be comfortable with not more than 50-60 points, right? Because in a particular day the volatility in Nifty is high to lows more than around 200 points. So in 200 points you would like to keep it around 50 points. Okay, so let us say you are more comfortable only in keeping around 50 points as far as Nifty is concerned in intraday trading. So you should devise the Fibonacci trading based on, see, the broad numbers are available. The Fibonacci can be used the way you want it, from any high or low. Okay, it can be used either to look at important supports and resistance levels, which we have already explained to you. It can also be used for projections of how much it can go up or go down. So those things you must know. It's like an art, because having known the basics, the fundamental blocks of the Fibonacci ratios and the extensions, you must know how to use it. Okay, and the type of usage will depend on your personality and the type of stop losses that you would like to employ in this. So let me say I'm going back to the Nifty. Okay, I will look at the let me look at the daily chart. Okay, now I will look at the so this is an important high, 18,141 and 18,265, because that at least will accept from this one, because this is this is one high, pivot high. You know what is a pivot high, and the previous pivot high, either you can take it from this or you can take it based on this. So now, having showed in the daily chart, I will switch to an hourly chart. Okay, so I will remove all this now. Okay, okay, now what I'm going to do is what we call as a Fibonacci extension. That is, see this, I'm considering this point based on the daily chart. This is an important high, this is an important low, and this is an important high. Okay. Now, what we are going to do is we are going to use 3 points to make a projection. So, let me explain that. Let us say it is like this. Okay. So what I need is point number 1, point number 2, point number 3 to make projections of this fall, whether it's supports here, supports here, supports here, all those things. Once I identify the support points, you know very well in Dow theory that once a support is broken, that itself becomes a resistance. So what you can use the support and resistance points for trading purposes. Okay. Now let me say for illustration purpose, okay, this is 18,265. Okay, this is 17,795, right? 95, and this is 18,141. 18,141. These 3 points are known to me, and I consider these as important support and pivot based on the daily chart which we have seen, right? Now, what are these places? Okay, what are these places that probably I should know so that I can trade? What is this difference? First of all, we have already the numbers and ratios are known. How is the ratio used? It is used on the differences, or it can be used as an absolute number also. Okay, I have no problem. Whichever way you want to use it, you can use it. Now, if you want to use only the let us say numbers, let us say 18,141 is there. So what are the issues as far as numbers is concerned? What are the issues as far as the ratios is concerned? I'll tell you. 18,141, you are aware of various ratios which we have seen. That is, it could be 55 numbers, 89, 144, 233, 377 and all. So these are the Fibonacci numbers you get. Okay. So you can use these numbers. Now 18,141. Now you must understand that, okay, you would like to probably look at these type of stop loss, 89, 144 difference, 233, maximum 377, so 144 points, which itself you may not be that comfortable. Let us say you are looking at 89, 144, 233, so you would like to keep a stop loss not more than 55 to 89 points. Okay, so let us freeze that. 18,141, just based on the I'm talking only about the numbers. 18,141, let us say you are using 144, right? So this becomes 17,996. The first number becomes 17,996. Then 18,141 minus 233, right? So I'll go to the okay, next one. 18,141 minus 233. Okay. So 18,141 minus 233, it becomes 17,908. It becomes 17,908. Okay. And 18,141 minus 377. Okay. It becomes 17,764. Okay. So the first number was 17,996 according to us. Because we are using the numbers which are comfortable to us, the ratios will be a little more helpful. I'll explain to you. So once from 18,141. So once it starts to break 17,996, okay, you may say that no, I would like to go for a short and keep 18,141 as a stop loss. Okay, because this is the first important Fibonacci number which you have picked up. Once that it drops below that, you are going short, keeping 18,141 as a stop loss. Then it comes to 17,908. Okay, let us say the next day you are coming. Okay, the first day you are taken profit, it fell below 17,996. At the end of the day, whatever it is, you are squared off because you are talking about intraday. The next day you are coming, let us say the market is at some 17,935 open or somewhere around that in the open. Then your trading strategy must be is you sell below 17,000 because that is an important support that you have identified. So what you do is you sell below 17,908, keeping 17,996 as a stop loss, keeping 17,998 as a stop loss. Okay. Now, let us say it is 17,908, then it goes to 17,764 or approximately that. It came down to 17,770 or 80 today. Then if it again starts to revive above 17,908, what you can do is that you can again, suppose if you have gone short here and if you have not taken profit, but it has come to this level, then in that case you can close it at this place itself at a break even. Okay, or you could have taken profit somewhere here. Okay. Now from this, what you should do is that now it's bouncing above 17,908. You can keep 17,764 as a stop loss. Okay, and then move up to 17,996. Okay, so you can use the Fibonacci numbers itself to make adjustments. Okay, now in the next couple of sessions we need to keep showing based on what happened the previous day for intraday illustrations to get you really on board. But right now, please take this this one, and suppose if you feel that this stop loss is wide and it's not acceptable, then we will look at the refining of this to come to type of stop losses that we need. Now, for which what we will do is that we have used the numbers here, right? So we will use the ratios. Now, you will see some sort of better comfort coming. Whichever one you want to use, you can use. 17,795, right? So 18,141. So let us say this gap 18,141 to 17,795 is 346 points. 346, right? So this difference between 18,141 17,795 is 346. It has gone to 18,141. Now what you should do is that the ratios are same, 23.5, 38.6, whatever. Now that ratio you should use it on the difference now. Okay, we are using the numbers on the absolute number. Now we are using the ratios on the difference. So 346 into 0.235 is the first place where you should sell. Okay, and put a stop loss over 18,141. So what is this place? 346 into 0.235. It is 81 points, right? So the first place become a sell below 18,060. 18,060 with a stop loss at 18,141. Stop loss at 18,141. Then what are the other places of support and resistance? Now one is the 18,060. What are the other places? Okay. Now 346 into 0.386. 346 into 0.5, which is not a Fibonacci, this one. This is 173. This is 346 into 0.386, right? This is 133. 346 into 0.618. It is 214. 346 into 0.765, and then 346 full. Well, there is 1:1, right? So what are these places? Now 346 into 0.765. This is 264. This is 346. This you subtract from 18,141, and you have the support levels on fall. Once that particular support is broken, you keep the previous levels as a stop loss and keep working towards a profit. Now, what are these places? 0.235 I have already shown you as 18,060. So 18,060. Now this is 133 from 18,141 makes it around 18,008. That is what we see, 17,996. Now this is 173. So another 40 points, 17,968, right? Then 2 and 4 is another 41 points from this, which is 17,927, right? Because 214, 18,141, this becomes 17,927. Then this is 264 points, which is another 50 points down, 17,887, right? This is 346, so 18,141 minus 346, 17,795. So we got right up to 17,795, right? Today we got, I think that is where it ended up, right? Right? Yeah. So it is just slightly below that 17,761. So what happens? Now let's look at, this is hourly chart. So what happened? The first point from 18,141, it was 17,997. That is what we have mentioned as, from the absolute figure, it was 17,996. From this, the first one was 18,060. Second was 18,008. Now we said once it breaks 18,060 itself, you can put 18,141 as a stop loss and keep riding on your profit. That happened. Now once it breaks 18,008, you can keep 18,060 as a stop loss, because you want a smaller stop losses, right? So you come to 52 points. Then it came to 17,968, right? So if you look at it, 17,968 to 974. So you can see 970, approximately 976. We said 17,968. So once it starts to break 17,968, you can keep 17,000, even 997 as a stop loss, or if you feel that is too close, you can keep 18,006. If you feel it's too close, you can still keep 18,060 as a stop loss, because you can keep one level also above that. Then after that, we have got 17,928, which we showed, right? So then 17,000. So once it starts to cut 17,928, you can keep the 17,970 as a stop loss, okay? Or whatever that you saw here, a little bit slight 7-8 points above, you can keep that as a stop loss once it goes below 17,928. Now once it starts to cross, the next level was 18,887, right? So this is the place, okay? 17,865. You have mentioned that. So 17,887 or 870. So once it starts to cut this, then we can keep 17,927 and 930 as a stop loss, okay? Then move ourselves to 17,795. So all these things have happened with this one. Suppose see, on any rally here also, it stopped closer to 17,939. So we need to slightly fine tune that. But what I'm saying is that you have been getting consistently lower levels. So what you can do in this particular case is, now it has come down to 17,865. We talked about 887. So once 887 is broken, then the next important above level is 17,930 or so, which we identified. There is always some 5-6 points move above what say, because that's how the market behaves, but there is no sustenance above that level. So instead of keeping one level above that, if you want, you can keep 1-2 levels above that. So I would recommend keeping 70 to 80 points stop loss rather than 40-50 points, which probably can get hit. So now it moved down to 17,876 when it is crossed. Then we said it can come to 17,795. This is the place, 17,795, and then it has to move above the 17,885 or 887, and that is what we 852. So it was much lower. It didn't go above that. Then it got cut. So now probably on an upswing again, no, you can keep 17,887. Okay, you can position yourself above 17,887, keeping this as a stop loss, and move yourself to higher levels. So either you can keep one level at this, because it's around 40-41 basis points, or you can keep something like a 52 basis points, or you can keep the first level. See, 18,060 there was a 23.5% retracement was 80 points, right? So this was the first 80 points. So you can always keep 80 points as a stop loss, because once the first trade that we initiated was around 80 points, right? So once it starts to cut certain level, you can keep around 80 points for the next move, and that is what has happened here also. If you see 80 to 90 points, so I think once it starts to move above that, you can keep this as a stop loss. You can keep this as a stop loss. So and if you see the revival also, if you see 80 points now, here it came to 17,780, and we are talking about 80 points. It should go to 17,860 or so. Came to 852 and started to move up. And here also, if you see the move, which was here 17,856, okay, 856, and then it moved. What we said is that if it touched 887, it cuts 887, you can keep either 928 as a stop loss, or you can keep 975 as a stop loss, because the first move is always taken off fast. So 17,856, it moved to 17,976. So either you could have bought again at above 17,928 with a profit target at 17,968 or 70, keeping 17,885, which we highlighted as a stop loss. So once it goes above the 960, 970 levels, and then it starts to fall below 928, you can even come out of that position at break even if you have not taken profit, and you can go for a sell keeping 17,975, 976 as a stop loss. Now probably it may because the first time you are looking at the Fibonacci trading system in intraday with in this manner, it may take some time. So every week when we have webinars, we will highlight take one of the stocks or Nifty or Bank Nifty, and with that we will explain to you so that you can look at whichever system that is comfortable to you and the type of stop losses that is there. You can look at it and do that trade. So along with this, with some patterns also, probably you can look towards a better trading system. Okay. So thank you very much. So any questions you may please ask. We have exceeded the time. Thank you very much. So thanks for your participation today, and happy Pongal, and we'll see you next week again with the same system and with certain deeper explanation. We will concentrate one day only on intraday, next day we'll concentrate only on position in stocks, then we'll look at commodities. So next couple of weeks we'll concentrate on specializing the Fibonacci trading system. Thank you very much.